The S&P 500 is trading very close to a major trend line from back in December of 2009. In today's video, we're going to take a look at why that trend line is so important, and we're going to try to understand what the next steps are for the market as a whole. All right, so without further ado, let's get started with the video. So what we're looking at is a weekly chart of the SPX. So I said that this trend line from 2009 is very, very important. So let's go ahead and zoom out and go to 2009. The reason why this trend line is very important is because it accurately predicted important levels of resistance and support moving forward. All right, so this is how we started this trend line. I started it back in December of 2009. All right, obviously it touches here. This was another point where the trend line didn't allow a break above. All throughout here, obviously it was in an uptrend. We traded below it. And then it gets interesting because it very closely predicted this top back in January, and then all throughout this move back upwards from COVID. During 1 week, we had a break above, which was a wick, but then it acted as resistance and we fell. It acted as resistance again back in October, and then it fell once more. And then finally, back in November of 2020, we finally got two closes above. We had one close, and then we broke below, and then we had another close. So we finally started to show strength above this trend line, and this ended up marking the beginning of the huge run that we had all the way back up to 480 almost. So basically, we're back to this same level over here, right? So we had this big run up. Once we broke down below, we retested, and then we could not hold. So then the move downwards was very, very abrupt. And then eventually we retested. We could not break above once more, but then we finally did once again in July. And once again, once we broke above, it signaled another rally. And then similarly, of course, we can clearly see as it fell below, we fell below very sharply. And now, you know, it was a false break and hold above back in November, where we broke above the same trend line and we fell. But now we are literally right back to this same very important level. So currently, what we currently have right now as a position is we're holding on to March 3rd 410 calls on the SPY. So when taking a look at this on the daily chart, right, the easy, technically intelligent trade, if you're just taking this trend line into account, is to be short against this trend line and wait for closes above the trend line before going long. Now, the issue with that is not only did we get a break above the prior Monday's high, which was what I was saying, like, would be very bullish, right? We got a break and close above Monday's high, but we also finally broke above this downtrend that was created from August 16th, connected to December 13th. And then these past few days, it was acting as clear resistance here. We never got a close above. We got this wick, but we never got a close above. So currently, it makes sense to lean long because we broke below this downtrend, this clear downtrend from back in August. We closed above the Monday's high. And now the main thing, right, is we could end up getting a retest of this trend line. That would basically coincide with 400, right? And that isn't a huge, big deal, honestly. We can get a retest of the trend line and then continue up. But currently, right now, what we see is bullish momentum. It is almost impossible to say that this is bearish and that you should, I mean, overall, right, like longer term, all of these pops are good opportunities to go short, but it's really, really tough to say. It's really, really tough to be bearish at the moment. The only thing is, you know, if they were going to break it above this trend line, it would have to be with this amount of buying pressure. You know, there's so much buying pressure. We broke above the trend line. We finally broke above Monday's high. We closed above it with power, right? And if they do want to break it above this trend, above the December 2009 trend line, it would be with a setup like this, where there is enough strength that we could get a break and then we would need 2 daily closes above in a row, in my opinion, for a continued move to the upside. And I think that this setup is pretty good for that. Tomorrow we might end up, falling lower. It's not a guarantee that we're going to continue just one direction, right? We could end up falling a bit tomorrow and getting a bounce. But overall, I am leaning bullish because, it's tough to lean bearish at the moment. But we do have to look at everything holistically. So I'm going to take a look at the indices, right? Specifically, we have to look at the VIX, the dollar, the bonds. So let's get started with the rest of that. All right, first of all, let's be pragmatic, right? There's no reason to just get married to a position. Let's look at the entire thing from a bird's eye view. Cool. So we know that the dollar has an inverse relationship to the market. If the dollar is going to show weakness, then the stock market should be rising. Now, the dollar is clearly in a downtrend, right? It's clearly weak, and the momentum is clearly bearish. We can see that from the MACD. The MACD is overbought and it's curling downwards. So if we get across below this blue line, if it gets across below the orange line, that is a bearish crossover. And generally that's very, very bearish. Now, with this setup, this is basically like a falling wedge pattern. Tomorrow, maybe the day after, we can continue falling lower. But what is most likely, what could end up happening, right, is we could get a bounce off of this lower level here. But still, the lower level on the dollar of this falling wedge is still going to be lower. It should be lower than today's low, at least. All right, so regardless, the dollar should be breaking today's low, in my opinion. I would be very shocked to see if the dollar continues bouncing like this. I'd be shocked. But currently, the dollar is very close to getting a bit of a bounce, but it's not yet there. The momentum is still bearish. So there's that for the dollar. And we also know that the VIX also has an inverse relationship to the market. So if the VIX is falling, then the stock market should also be rising, right? Very similarly, the VIX is also clearly in a downtrend. The MACD indicator is showing that it's overbought and looking to cross down below the yellow line. And once again, if we do get a cross below, that is known to be a bearish crossover, and that is going to signal more weakness in the VIX. And once again, if there's more weakness in the VIX, then the stock market should be rising. So clearly, that's pragmatically what the setup currently looks like. Next, I want to take a look at the bonds. We know that the bonds have a bit more correlated relationship to the stock market. If the bonds are doing well, then the stock market should be doing well. Okay, so whereas the dollar and the VIX were overbought, the bonds on the MACD are very oversold. So if we get a bounce here on the MACD and pulls out of its oversold condition, then that means that the price of the bonds should continue rising. And if the price of the bonds continue rising and they don't show extreme weakness, then that means that the stock market will maintain its price or continue to show strength. All right. So as long as the bonds are not breaking below any major lows, this is still good. So clearly we can currently see that the bonds are still in an uptrend. And if we get a solid close above the 22.6% fib from the recent lows to the most highs here, and especially if we get a break back above 132, 133, then this is going to be very, very good for the bonds. But currently, we're not seeing excessive weakness out of the bonds. When we're taking a look at the NASDAQ, the QQQ, we can see that the price, obviously, we broke above. It's showing a lot of strength. But more specifically, the MACD, the blue line is flat. It is flat here. It's not moving up. So the fact that it's flat and even actually moving down a bit while the price is moving up, that is showing extreme buying pressure. So basically, if the fact that the QQQ is bouncing like this while the MACD indicator is not rising, right? Because usually when we're rising in price, the MACD should be moving up like this, right? But the fact that the MACD is pointed downwards with a break above resistance, that is showing extreme pressure, buying pressure. Okay, so the NASDAQ clearly looks very strong right now. The IWM currently does not look as strong because most of the money is flowing into tech stocks right now. So the IWM is relatively weaker than both the SPY and the NASDAQ, but it's still gapped up. It's showing strength. It almost closed above the recent high that it had, but it did close above the highs from Monday. So the IWM is still showing strength as well. And we can see that the IWM is the most oversold in terms of the MACD indicator as well. It's trading below the yellow line, whereas this MACD looks much more favorable than the MACDs on the SPY or the NASDAQ. So basically, if the IWM can hold above levels of support and not completely break down, then it'll give more room for the NASDAQ and the SPY to continue rising much more. And currently, that's what's happening on the IWM. Next, let's take a look at the international markets. This is the German market. We can see that it looks very, very strong in terms of its move on the candlesticks. And we can see that in terms of the MACD, it is very oversold. So there's still a lot more room to go to the upside in terms of the MACD, while the candle structure is also bullish. So the German markets look very, very strong. The Japanese markets look very, very strong as well. It's been on a complete tear. It's breaking and making new highs while the MACD indicator is moving lower, very similar to the NASDAQ. So it's showing a lot of explosive potential here as well. The British markets also look very strong. We wicked below these lows here. The MACD is extremely oversold as well. The MACD is falling lower, yet the price is rising. So if the MACD indicator can start showing some more strength, that means that the British markets should start rising as well. And then, of course, the Chinese markets are also very, very strong. You can see that the MACD indicator is still oversold. So if we get a cross above, obviously that would be even more bullish. So I understand I showed you guys a lot of bullish cases for what's going on in the market. All right. But one of the things is we have to be pragmatic. So I put side-by-side chart of lumber, and basically it's like lumber futures, right? But this is the lumber cash and the SPX on the right. So generally what ends up happening is when lumber is doing very, very well and commodities are skyrocketing, right? The S&P 500 usually tops out. So it's not an entirely perfect scenario, but currently we can see that lumber is trading very far extended to the upper level of the Bollinger Bands, right? And now the best we could do is go back in time and look at what happened in history. All right, so the Bollinger Bands, we were trading outside and we were very overextended over here, right? Back in January and January 13th. And basically, as I hover my screen over on the left, right, wherever it is, you can look at where we are on the right on the SPX chart, okay? So right here, you can see that this marked a bit of a top here. You can clearly see that this marked a bit of a top. We were very overextended to the upside, all right? Now, when we look in October, it's not as perfect, but we can see that in October, we were very overextended. But this did not play out as perfectly. We started showing some weakness afterward. And then once lumber started showing a lot more weakness, that's when the weakness in the S&P 500 started showing as well. And then we had this big drop afterward. But then it worked very well in September. So we can see here in September, the S&P 500 was making new highs over here as well. Lumber was making new highs, was very overextended. And then once lumber started showing weakness, the S&P 500 started to capitulate and show a lot of weakness as well. And then you can see how it worked in August. The SPY was topping out, but then lumber topped out earlier, right? It topped out first, but then once it started showing a lot more weakness and we had this big move on October 18th and this weakness here on October 18th, then that's when the S&P 500 started to follow as well. So you can see that lumber is, it acts as an early indicator to forward weakness in the SPY. And then you can see how this acted back in July. Recently, we were also showing a lot of strength on lumber. July 7th, July 8th, we were very overextended to the upside on lumber. But then You can see correspondingly to what happened on the SPY. Once we start showing weakness on lumber, the SPY ended up falling from 390 to basically 375 during this period of time in July. So right now, basically the point of me showing you this is that lumber is very overextended to the upside. Currently, there is still more room to go, potentially, right? But the more, basically, if this continues showing strength, it's not a guarantee that it's going to topple over anytime soon, right? But the main thing now is this is a warning signal. This is a warning signal that this move may not continue for that long. And that's all this is. We can continue up for another day or two, right? But once lumber starts, even if lumber starts, you know, stagnating, but once it starts breaking below support, that's when things are going to be much more important for the SPY. And if lumber starts breaking below these levels of support and the SPY is still trading above and holding support, then based off of this move, from what we've also seen in the past, we can lean more bearish on the SPY, given the fact that lumber showed a very weak move. So lumber in this instance is showing like a similar correlation to the bonds in a way. Not like a correlation directly, right? But I'm saying if we see, because for the bonds, for example, if the bonds end up breaking below a level of support, that's when the weakness ends up showing in the stock market. So similar, once lumber starts showing weakness, the stock market shows weakness afterward. So there's that. That's what I wanted to show you guys. And the only other two bearish things that I'm looking at currently is NVIDIA and basically AMD. So NVIDIA, this does not look like a very bullish candle. Yeah, we broke above and closed above, but this is not a solid green candle. This isn't the best case scenario that bulls would want to see on the chips. Yes, we can continue higher. The Bollinger Bands are still moving upwards, right? There's still a lot more room to go, but this is not a bullish setup. And then it's even more prevalent when you look at AMD. AMD clearly does not look bullish. And obviously you can see the difference in the after hours. But yeah, basically these are the two things that I'm a bit worried about, because NVIDIA and AMD had a big reason why this move happened in the tech sector. So the fact that they did not really have like bullish breaks, you know, and they didn't paint a very bullish picture, that's what I'm a bit worried about. But aside from that, on paper, according to the VIX, the dollar, the bonds, and the technical analysis on the SPX and everything, things look pretty bullish. And regardless, the main thing is that as long as we remain above 399, honestly, as long as we remain above 399 to 400, I'm still going to lean long on the market. And yeah, I mean, the rest, we just have to see how everything else works day to day. But I would have loved to see the chips showing strength. But aside from that, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.